Well, hey everyone, it's Wade Patterson, co-host of Show Me the Crypto. And one thing you might notice on this episode is that our audio, Ulf and my audio, isn't quite as good as it usually is in the episode. That's because we had the wrong mics selected. So if this is your first time listening to Show Me the Crypto or watching Show Me the Crypto, make sure you check out other episodes because our audio usually is better. But the good news is this was such an awesome interview with Shahar that the content is great. So thank you for putting up with the poor audio. We will be better next time.
Show me the crypto. Show me the crypto. Show me the crypto.
In a world on the brink of disruption, two men will bring you clarity by interviewing some of the most intelligent and influential names in the blockchain world. Welcome to Show Me the Crypto with your hosts, Wade Patterson and Ulf Lonergan.
Well, hi there and welcome to Show Me the Crypto. My name is Wade Patterson.
And I'm Ulf Lonergan.
We're a couple of friends from Canada who love learning about cryptocurrencies and blockchain technology, and we're happy you're along for the ride. Whether you're a crypto virgin or you know your way around the block, we hope our interviews with some of the most intelligent and influential people in the space help deliver you with value. And on this episode, we're joined by Shahar Abrams, founder and CEO of Road to Babylon. In 2017, on a flight to Alabama, Shahar read The Business Blockchain by William Mougayar, and by the time the plane landed, he knew he wanted to spend his life focused on blockchain technology. From 2018 until early 2021, Shahar was IBM's public sector blockchain delivery lead, and in January of this year, he parted ways with IBM to start his own financial education platform, Road to Babylon. Shahar, welcome to Show Me the Crypto.
Thanks, great to be here.
Yeah, we're excited to have you on. So let's go back to that 2017 flight that I mentioned in the bio. What enticed you to purchase a book about blockchain when, that wasn't something that was familiar to you? And specifically, what in that book led you to have that aha moment that this is something I want to spend my life doing?
Yeah. Why did I buy the book? I think it was because of work. I don't actually remember my reason for, ordering it, off Amazon. I think I had heard, a lot about the tech, working at IBM, kind of being around that. And I was aware about crypto assets, specifically Bitcoin, but I had never taken the time to understand it. And I think, I'd watched the market do this and that, and I was like, what, maybe I should, look into this and see what this is about. And so I got the book, and the first chapter of this book, the book was written in 2016. So it was one of kind of the earlier blockchain explainer books. But the first chapter of this book was really just an overview of the Satoshi white paper. And that's kind of what immediately clicked for me. I think and it did a good job of explaining this, but I saw immediately that, wait a second, this is about trust. This is about trust online. And this was a problem that I was, had spent a lot of time thinking about. I was pretty, I was pretty unhappy about, I guess. I was, I didn't know. I spent a lot of time thinking about, societal problems and worrying about that type of stuff. And when I learned about the idea of crypto is trying to, I think, addressing two of the most important problems we have, which is, security and trust. It kind of just, was a eureka moment, right then. And I knew, that, this was super important. I wanted to be involved in it. And so then, from that moment through till, even now, I've just become more and more involved and gone deeper and deeper down the rabbit hole.
And speaking of sort of getting involved in blockchain, and crypto, a lot of people, when they first discover it and latch on in some way, whatever interests them, it's usually investing that is at least maybe not the reason people necessarily get interested, but it's the first thing they do, right? Buy some, hodl some Bitcoin, or, go make some trades. For you, was it investing, or did you get involved in other ways as well right off the bat?
Yeah, I'd say it was both. Honestly, because like I mentioned, it became kind of philosophical for me immediately. Because again, like I saw it as, I'd been living and working in DC for a few years at that point. And I was, getting very disillusioned with how it all worked, in the system. And it was really depressing to me. Like just think I have no idea how we're going to solve this. Things feel so broken. And that immediately kind of provided an answer, even in a very early form. It was like, there's hope, So that was definitely a portion of it. And then certainly a portion of it was the fact that you could make money off of it. And there's an investable asset. And that's something I was always interested in. Actually, what kind of set me up, for this eureka moment was a year earlier. I had read a book called Rich Dad, Poor Dad, which hopefully everyone's heard of.
It's a great book.
Great book on personal finance. And that book really opened my eyes to, it got me more interested in kind of active investing rather than just this passive, buy mutual funds and wait and, not really know what's going on. And it really gave me this idea. I really like the idea of assets as things that put money in your pocket. And one of the central ideas in the book, and the idea of passive income investing. And as I would kind of find out later, one of the things that really increased my conviction about crypto, and kind of a central part in what I'm doing and what I try to teach, is the opportunities for passive income in crypto are just unprecedented and really accessible as well. So it was both of those things. I'd even say it was perhaps 50-50. I was really interested in markets and investing, and also, it connected with me philosophically.
So you worked with IBM starting in 2014, first as a strategy and analytics consultant. So this blockchain division, was that something that you helped create, or just that you joined? That was it? Because that seems like early for a company like IBM to already have a whole blockchain division. Well,
it was, I joined it, but I was like one of the first people. So, IBM, very large company. We have, a big consulting business, and that's split up into commercial sector and government sector. I was in DC, so I'd been working in the government sector practice, like you meant, since 2014. And at that time, in 2017, our government blockchain practice was just getting stood up. The commercial practice was actually a bit older. They'd been around for a year or two. And the federal blockchain practice was one guy, one partner. And that's in 2017. And I found out who he was, and I bothered him for months on end until eventually in 2018, he brought me on, and I became kind of one of the delivery leads. But basically means I was leading, our kind of largest projects in that space, which we didn't have a lot of projects, but we had a couple. So yeah, and I knew immediately I wanted to work in the space, and I was kind of playing around with how to do that. I wasn't, a developer. I didn't have a huge interest in, really learning how to code. I really, more liked, strategy and analytics and stuff like that. So, when I ended up joining the practice, the largest project I worked on, which was a couple of years, was a project for the Postal Service, where we were building basically an NFT blockchain for them to track mail, international mail, as it moved across many different organizations and changed chain of custody all around the world. And I say, and so, each mail piece was like an NFT that we would track its life cycle, and we would help the Postal Service understand what was going on. And then once we had that system, kind of single source of truth for data, which was the blockchain, on top of that, we could build all sorts of cool tools to automate, dispute resolution, for instance, payments, And, there was a long road for that. Long story short, COVID really kind of put a dent in that project because Postal Service woke up and said, we're just cutting the budget for everything. We have no more innovation budget. Thankfully, though, I think it has picked back up, which is good because, we did a lot of great work there and we were pretty far along. We had other organizations, contributing data and all of that stuff. So yeah, that was fun, and it was really an interesting perspective into, the stuff you don't really hear about very often because it's less exciting, is the enterprise kind of part of blockchains, you have kind of private permission blockchains, and how does governance work there, and and kind of finding these types of use cases in the existing commercial landscape and government landscape. So it was very interesting. Yeah. It was fun.
It is interesting. We haven't had a chance to talk to someone who's kind of been involved with blockchain in that sector. I'm curious. That in itself is really cool to hear about, like mail delivery and implementing blockchain, to further innovate that space. Are there other use cases or, examples that you can share, or was that kind of the primary project you were working on at the time?
Oh, yeah. Are you talking about use cases that I specifically worked on, or things that we were excited about, things that we wanted to work on, things that are coming?
Excited about, sure. It doesn't have to be something you worked on.
One of the things I'm probably most excited about, which is going to, be kind of on this energy. It remains to be seen exactly what it looks like. You could, build it like on Ethereum, for instance, but the model would be different. But one thing I'm really, really excited about is blockchain identity. So if you think about like your identity as a person, your identity is naturally decentralized, actually, right? Your university will verify where you went to university. Your employer will verify things about your work history. The DMV verifies whether you can drive. The doctor verifies your birth, right? So your identity comes from all these different kind of sources of authority. And so I think it makes a lot of sense to, well, I guess the question is, what if we could have that level of granularity in our actual identities? And what if these identities, rather than being some crappy like physical card that you can lose or get stolen that has too much information on it, what if you could, granularly had what we call verifiable claims, everything you say about yourself that, well, you have a cryptographic proof for it. And in fact, the proof is zero knowledge. So now you can share things about your identity with a QR code, and you have the credential kind of sitting in your wallet, but you can do it without actually revealing the information. So what does zero knowledge mean? Zero knowledge means that I can prove something to you with just like a yes, no, without actually revealing what the information is. So the simplest example is, oh, you want to come into this bar? Well, are you over 21? Well, today you have to show your ID. The bouncer sees your eye color, hair color, height, weight, exact date of birth, like plenty, more than enough to steal your identity, right? Instead, I could show a QR code that just is a proof that says, yes, I'm over 21. Doesn't say how old I am. Doesn't say, well, all they need to know is that I'm over 21, right? So we have that ability to create those granular level, what are called in some circles decentralized identifiers that'll be individual credentials that live on your wallet, which you have complete control over, right? So, and you can also use these to monetize your data, right? So in healthcare, another area I worked in a little bit at IBM, healthcare data is incredibly valuable, and people, healthcare providers, are looking for people to give them data all the time to do clinical trials. And some of this data is really, really valuable. You can make thousands of dollars, right? Giving your data to people performing important clinical trials, especially if you have some rare trait, right? It can be worth tens of thousands of dollars. So right now there's really no way for people to monetize that. But what this type of thing will allow you to do is not only can you monetize it, but you can do it like peer-to-peer, right? You can just interact with that provider or with a smart contract, right? That'll, give them time limited access, for instance, to your data, and you can get reimbursed for that, again, directly into your wallet, right? So really, interesting, exciting stuff to come there, right? And then there's so much more you can do with those, by the way. But that's one area I'm very excited about. I think it'll take several years to really get there, but it's coming.
I think it's so interesting, the topic of like identity on the blockchain. Something that I still haven't wrapped my head around, and I'm sure it's a simple answer, I just haven't figured it out, but is in regards to, okay, so your example about bringing an ID and saying you can lose the ID, is it not the same argument to say, okay, well, if I have it on my wallet and I have my private key and I lose my private key, could I not still lose my identity if I was the one in charge? Or is this something that the government would still issue out on a specific wallet, and if you lost it, you could go through some claims process to try and get access again? Or how would that work? Or are you not really sure of that either?
Yeah, well, I mean, no, that's a great question. That's one of the really important things to figure out, to take this mainstream. You can't just have it to where if you lose a private key, your identity's gone, right?
Yeah.
we can't let people make that mistake.
I don't exist anymore.
There will be some. So if you think about, well, who's going to issue these IDs? How are you going to get them, right? It's going to come from these various authorities, right, that I mentioned. University for this, work for that, doctor for this. So you'll be able to go back to that authority if you lost a credential that was issued by them. And when I say issued by them, right, literally they sign it, right? They sign the credential, and that's what people verify when they scan the QR code, right? That this is a credential signed by, University of Cambridge or whatever that says that they went there. We know that's their signature. So if you were to lose that, or if you wanted to cancel it or whatever, you could, go back to that authority, show up, or take a picture of yourself, with the newspaper or whatever, their verification process is, and you could, get the credential again because you still have the identity, right? So you can, still go and get a new credential.
Shahar, I want to transition into the road to Babylon, which I mentioned in the bio as well. So what exactly is that, and who are the clients that you're working with?
Yeah, so Road to Babylon, by the way, I called it Road to Babylon because of another personal finance book I really, really like, which is called The Richest Man in Babylon. Another great read, really quick read. Recommend to everyone. It was kind of, I wanted a way to scale education in this space. So, one of my central roles in IBM is, like I said, I wasn't a developer. I was the guy they kind of brought in to explain the tech to people. So that would be, government, executives, C-suite executives, students, IBMers, all sorts of people. So I am well practiced kind of in educating people about this. Something that I really enjoy. So I wanted a platform kind of to ideally, try and scale that. So I have kind of two, or let's say three main offerings. One is just kind of free resources that I do frequently. So every week I do a newsletter that has kind of my thoughts on what's going on in the market, and kind of try to distill, some of the news because there's, so much happening. And I'm, fortunately, I just do this full time all day now. So I have the time to spend to, help people kind of understand what's going on day to day and what's going on in the market. So I have, you can sign up for my newsletter on the website. Again, it's free. And it's every week. There's also an archive of all my previous newsletters on the website. I think they're pretty good. So in addition to free resources, I have a consulting practice where I do work with clients, people of all ages and backgrounds, helping them kind of create their investment strategy in crypto. I think a lot of people are really interested in crypto, but maybe they don't fully understand it, or they're not really sure where to get started, or they're not really sure, or they feel like it's too risky, which really means because they don't understand the risk, which is really understandable because it's a very new type of asset class. It's hard to fully understand the risk. So I work with people on their investment strategies. And then what I'm really excited about is I'll be releasing an online course that'll be 6+ hours of content on everything from, crypto education, getting you to a place of really good understanding with the tech, which I think is important. If you're going to invest in everything, you're going to invest in anything, you should understand it. That's a good rule of thumb. So everything from crypto education to, investment principles and how we apply investment principles to crypto, how we actually assess risk in crypto, how we create, portfolios to match our level of risk. And then there's this, section on deep dive. So we go really deep into all sorts of really important, concepts in the space, including, the biggest technologies, Bitcoin, Ethereum, layer ones, DeFi, NFTs. We have deep dives into all of that. And then, also the last section, which I think is will be a great value really to anyone, is like my own kind of tips and tricks in crypto. So things I've learned over 4 years, of trial and error, and also good success investing in the space. Like everything from how to save on gas fees to like how do you actually file your taxes? How do you think about loans and leverage? And how do you earn, right? How can you earn passive income on all of your crypto assets, anything, right? And what are the various ways to do that? So I think there's a lot of great content in the course. And, I'm hoping that'll be out in the next month. We are just in the final stages of, editing all the videos. I made all the videos, really digestible, like 5 to 10 minutes. And it's going to be very well curated. So if you're interested in that, again, on my website, there's kind of a section for the course and you can sign up for updates. And, I hope people check it out. I think it'll be a really great value.
Ulf, do you realize our audience has been either watching or listening to this episode for 20 minutes?
20 minutes? No, they should probably subscribe.
Yeah, they should subscribe. And if you're watching on YouTube, make sure you comment and turn on notifications. And if you're listening to this podcast, especially if you're on Apple Podcasts, leave us a rating and a review.
We're also on Twitter, Instagram, and even TikTok. So go check out the episode description. You can find all that information below. And we have an update on the NFT, don't we?
That's right. We didn't previously mention this, but this NFT for OG supporter is a one of one. There will only be one of this kind ever minted, and we have a few surprises for the person who purchases it. The link is in the episode description.
And back to the episode.
So, Shahar, on the subject of passive income, you've mentioned a few times that crypto can be a great way to earn passive income. I'm certainly aware of a few ways, but I know there's plenty of ways out there. What are some of your favorite ways to earn passive income through crypto?
Yeah, so I would say I have two favorites, but there are lots of, like you mentioned, there are lots of ways. I try to go over a lot of them more in depth. And again, you have to think about it in terms of risk, right? So there's various ways to earn passive income, and they have various kind of risk profiles. So I think the least risky, one of the least risky things you can do is you can give it to kind of a custodian, what we call CeFi, centralized crypto finance in crypto. And that custodian it's the same way that your bank works, right? You give your bank money, they're the custodian, they're regulated just like these platforms are. If you use the right ones, right? And they loan out your assets to people that need them, right? And then they make yield on that, right? And then they pay it back to you. Now, in the banking system, they pay you, 0.1%, 0.5%, and you're supposed to be happy with that, right? But in crypto, because these assets are way more efficient and way more transparent, and you actually have the ability to own them, you get much higher interest. And so a lot of these platforms, will pay really great interest rate. I earn in these platforms 3 to 6% on my Bitcoin. I earn 5% on Ethereum. You can earn up to 14% on some other crypto assets. Stable coins, which, hopefully people know what stable coins are. They're just crypto versions of US dollars, right? That are backed 1-to-1 by real dollars, depending on the stable coin. Those can earn up to 9% interest. So again, the money you have sitting in your bank, you can convert it 1-to-1 for free, 2 stable coins, put it on this platform, and immediately start earning 9%. So a lot of people don't know that, but so that's one way. And the platform I really recommend for that is called Celsius Network. It's one I've been using for years, and I've never missed an interest payment. They pay you every week. Over 150 weeks, I've been using the app pretty much since it came out. I've never missed an interest payment. Now, if you want to get a bit more advanced and maybe take a little more risk, there are many, many cool things you can do in DeFi where you can earn very good passive income. And so one example of this is yield farming. And so what is yield farming? Or what is, providing, usually when people say yield farming, they mean providing liquidity to a decentralized exchange protocol, for instance. Now, what does that actually mean? Well, if you think about, Uber became the biggest car company, the biggest taxi company without having any taxis, right? Airbnb became the biggest hotel company without owning any real estate. So too, decentralized exchange protocols like Uniswap are becoming the largest exchanges without having any assets. So where do they get their assets? They get it from all of us. Anyone has the ability to put their assets onto Uniswap, and they are making the market. They're providing liquidity for other people to trade. And when people trade, you get the fees. Basically, what this allows you to do, which is really powerful, right? Anyone can be the house, right? Anyone can, put in their assets, just let people trade. You don't really care what happens with the price, as long as kind of, you want it to kind of stay in a range. But you let people trade, right? And every trade, you earn the fees. So you kind of are the house, and you know what? It's good to be the house. It's very lucrative. And there are many variables. The platform I use the most is Uniswap v3. That's kind of the most advanced one. Lets you control like a lot of different aspects on your liquidity positions. But you can earn you earn triple digit APY on these types of assets. So I'm and that's about where I'm at. I'm earning triple digit APY across most of the assets I have on those platforms. And that translates to a lot of passive income, which is really great. I think that specifically, yield farming, the ability to be the house on this crypto internet that we're building is, probably one of the best kept secrets in the world right now, because you can really do it with any amount of money. I really recommend having probably a couple grand at least to kind of offset transaction fees that you'll have to pay, not have that eat too much into your returns. But if you have a couple grand and, you want to compound that to the tune of triple digits and be able to control your risk, that's definitely something you should look into.
When it comes to providing liquidity in DeFi, for those who start, going down that path, they start doing some research, you inevitably learn about impermanent loss and some of the risk around that. Are you able to explain at all what impermanent loss is? Sure.
And I think, usually I shy away from getting that deep, but I think you guys have like a crypto audience. So happy to. So impermanent loss is a very important concept. And basically, when we talk about risk and providing liquidity, we're talking about impermanent loss risk. So what is impermanent loss? Well, if you think about, providing liquidity, what's actually happening, right? You're giving assets, usually 2 assets, right? You'll because people are trading between 2 assets, right? So you'll provide 2 assets, say it's ETH USD. Really, it'll be USDC, right? Stable coin, but ETH USDC. When people are, and then you're providing that liquidity, and then someone comes in and buys ETH. So what's literally happening is they're buying your ETH. They're buying ETH out of your pool, and they're giving you in return USDC. So the amount of USDC in your pool goes up because someone has given you that to buy ETH, and the amount of ETH goes down. And so that's very normal, but now you have to do the thought experiment. Well, what would happen if lots of people just all bought ETH and ETH starts to moon, right? So say like we put in liquidity with ETH at $3,000, and we put in, 1 ETH and $3,000. Well, if ETH goes up, 100% to $6,000, what's going to happen is we don't have as much ETH exposure as we did before, right? Because the assets we put into the pool, we now have a lot less ETH and a lot more USDC. In fact, we may not have any more ETH, depending on how we've set the parameters for the liquidity. And so that's impermanent loss because, it's basically kind of this opportunity cost of, well, if we had just kept the ETH, it would now be worth more, but we no longer have it because it's been all bought by, from the traders. Now it's called impermanent because, if the price goes back down, then your pool fills back up with ETH, right? And it may get back to $3,000 and you'd be back where you started, but you'd have all the fees that you earned in the meantime. So when you're thinking about providing liquidity, this is something you need to take into account, right? What's going to happen if one of the assets changes drastically in value to the other one? What are we going to do about that? Are we going to sit tight? Are we going to expect it to come back into range so that the assets become kind of equal again? Are we going to, close the position, buy back what we had perhaps? And really what you have to ask is, how long, right? How long do we expect it to kind of stay in that range before, you don't want to provide liquidity to something that's going to moon the next day because you're just going to lose that asset that you had. So all of these things are important considerations you have to take into account when you're providing liquidity. And hopefully, that makes sense. People understand what impermanent loss is. It is kind of a tricky concept.
I think naturally our audience does typically know a bit about crypto. However, our trajectory is to, kind of educate those who are new to the space. But I think you did a really good job, just really basic form, laying those ideas out. We've talked about this a little bit on previous episodes, but when it comes to financial education, I know for Ulf and myself here in Canada, that's something that really was lacking. There's not that built into the high school curriculum or that kind of thing. I'm assuming it's probably similar in the States as well. Why do you think that is, that, something as important as finances isn't part of our curriculum?
That's a great question. And I've spent a lot of time thinking about that. And I don't know. I think it's, I try to steer clear from like the pernicious reasons, which is, people just want you to work and they don't want you to ever be rich so that they can stay rich. That's kind of the pernicious reason. I don't know if that's true. Right. I think that, there's just kind of this, this mindset or perhaps social paradigm that, you go to school to learn how to be a good worker, right? You go to school, you learn things that are going to help you, work because that's what you need to do, right? You work and that's how you get money. And that's kind of the idea that our society is kind of predicated on. But the best way to get money actually isn't to work necessarily. It's to make your money work for you, right? So schools teach you how to work for money, right? Really, you want to learn how to make money work for you, right? Why? Because that scales, whereas you spending your time, selling your time all the time to get money, while that may be good in a lot of situations, it doesn't scale, right? And if you want to eventually retire, and if you, want to really be wealthy even, you have to learn the other way, of doing it. Everyone that's very wealthy, has their money working for them, right? They know that that's one thing they all have in common, unless you just won the lottery. And that's why, people that win the lottery, they end up broke, right? Because they never learned how to do that. It doesn't, you can have a lot of money, but if you don't know how to put that money to work, you're just going to spend it and, and it'll be kind of a missed opportunity. So as, I don't know why. I wish I knew. But I'm trying to change that, right? And I think similar to you guys, right? I never learned that stuff. I even went to business school. I studied finance in college. And I learned how to, all these exotic methods for like valuing assets, which they were teaching me so that I could go work at an investment bank and get paid by them to do this stuff, which thankfully I decided not to do. But, I didn't learn anything about, well, how do you actually invest? How do you invest for yourself? How do you, assess investments and learn how to, put your money to work, right, in all these various ways. And it's really unfortunate. So, again, I'm trying to change that. I know there are a lot of people, good, financial educators and personal finance champions that are trying to change that. One thing I'm doing here in Atlanta, which I'm excited about, is I have a project with the United Way here. And, we're trying to create, kind of a hands-on sort of class where we'll take some, high school students and college students and give them money, right? And allow them to invest it and kind of coach them through the process. And then they can get real experience, doing this. Because, if you don't learn how to do it in school, which nobody really does, the only way you really can learn how to do it, you either have to teach yourself through trial and error, which is how it usually happens. And that's certainly how I did it. I had to, and what that means is that I failed a few times and lost a lot of money before I was able to before I actually figured it out. And that's usually, unfortunately, what has to happen. And unfortunately, some people, when they fail, and maybe they lose a lot, maybe they're wiped out and they can't get back in the game. Or maybe they, think, what, I can't do this. This isn't for me. And they don't get back in the game. That's really, really bad. The other way you can learn it is from your parents. That's how most people learn it. But, if your parents don't know it because they never learned it in school, then they're not going to teach you and you're not going to learn it in school. And it really creates this vicious cycle. So, like I said, I think it's a really, really important issue and there's a lot of work to be done. And hopefully, I think the good news is it's getting a lot more recognition now. I hope. Or maybe that's just, my circles where I see that. But, I think, that there's progress to be made and, some things I'm doing which I'm excited about. And, I think, hopefully we'll move the needle over time.
For someone who's involved in, that aspect of financial education and helping people learn how to invest and utilize crypto, as an investment tool, there's a lot of potential risk in this space is strictly because of, one factor at least is the volatility. It's a super volatile space as far as the value of crypto assets going up and down. Sometimes, 100, 200, 300%. It can be crazy moves here. So how do you educate your audience in what is a high risk investment versus something that's maybe safer, and how do you approach volatility?
Yeah, so I think that, the space certainly has volatility. But I think if you actually look at the stock market, it's not actually that much more volatile than the stock market. And like the stock market, the equities market, you have assets that are more volatile and assets that are less volatile. And in the stock market, you have penny stocks, right? And they move hundreds of % a day, or they crash to zero, in an instant. Another good example is like weed stocks. Those are incredibly volatile, right? A lot of them. So, really, it's just kind of, it's very similar. I think it feels perhaps more, perhaps more volatile or more risky and part of that is because it's just open 24 hours a day. And so it's always, going up and down a lot, rather than just between 9 and 5. But, so, I think, volatility is certainly an aspect of risk. And when I talk to people about risk, I really try and start from, how do you determine the level of risk you want to take? Because everyone's different. And some people are totally happy, experiencing high volatility and it doesn't bother them and it doesn't lead them into making bad decisions, right? Because it, triggers their emotions or something like that. And some people just don't want to deal with that and they know they can't handle that, right? So that's where you have to start. And then whatever kind of risk tolerance level you fall under, maybe because of your personal preference or your life situation or whatever that might be, then, there are assets, I think, that fit in that risk profile, even in crypto. So, I think a really good kind of shortcut, if you're trying to assess risk in crypto is go to like CoinMarketCap and sort on market cap. And, the higher the market cap, it means there are more investors in it. There's a kind of a bigger market around it. There's more adoption. So that's a very good proxy for how much risk there is. So if we go by that kind of metric, Bitcoin is the least risky. It's been around the longest. It has kind of the largest investor base, the most adoption, the most kind of industry recognition, institutional adoption even now, right? So Bitcoin is the least risky. Then number 2 is Ethereum, right? And it's not necessarily a close number 2, right? Because there's a large market cap difference there. So Ethereum is more risky than Bitcoin, right? And then after that, there's kind of another big gulf. And then and then you have market caps, I think, under 100 billion, right? Less than a third of what Ethereum is, which is about a third of Bitcoin. And those assets are more risky. And then you can keep going down the list, right? And the smaller your market cap gets, you're under $1 billion, you're under 100 million, those are very risky assets. They're very volatile. There's not a lot of liquidity. There aren't a lot of investors. It can be hard to tell, right, how many holders there actually are, or if it's just, the developer that has it all. So these are, some of the research items you need to do, if you're going to invest, especially in the riskier coins. So I think that's a good proxy for how to do it, in kind of shorthand. But the equity market is the same thing. There are really low cap, stocks and stuff like that that'll be just as wild, right? So I don't think crypto is that different. I think as time goes on and the asset class even matures further, you'll see it even look more similar.
So one thing I heard you say in a different interview was talking about how early on you kind of got that situation in 2018, 2019, watching the portfolio, obviously late 2017, it's growing. And then like many of us, myself included, we saw it fall back down. And that's maybe one of the unique situations when it comes to the volatility is, at least historically, it seems like crypto has followed these bull cycles. Everyone has their own theories on what that looks like, whether it will continue. But I'm curious to get your thoughts. I mean, the last 12 months have been super, if nothing else, super interesting in the crypto space, how everything's played out. But do you have any theories? This is a 2-part question. First part is, do you have any theories around this kind of 4-year cycle, that type of thing? And then the second part tagged onto that is, how do you advise clients? Because, if I was coming to you right now and, let's say this 4-year bull run cycle kind of plays out and I was putting a ton of money, and then all of a sudden I saw what happened in 2018 and everything drops, that might be something that's a little bit spooky as an investor. So is that something that you prep your clients for, I guess?
Yeah, absolutely. A great question. So first, I like to start with cycles are not something unique to crypto, right? In fact, all markets have cycles, and the only kind of difference is, kind of the magnitude and then the frequency. But if you take a chart kind of crypto or just Bitcoin, right, from say, 2013 to 2017 or 2017 to now, and you have like the big, kind of, this kind of oscillating, kind of cycle, you'll actually find that pattern everywhere, right? And it might not be on the same time frame. It might be on a decade's time frame, or a 50-year time frame for older assets, but that pattern's everywhere, right? So all markets have cycles, and so the question is, all right, how do you want to play it? And I think we'll see, by the way, crypto cycles become longer over time. I don't know whether now, it's happening now or not, but as the asset class matures, I think it's natural to start to have kind of longer cycles and, and less volatility. But, I think, there's a few ways you can play it, which is, one is you can not care and you can take a long-term view. And that's probably the best thing to do for most people. Or you can try and be tactical, right, to a degree, and say, I'm going to try and sell near the top of the cycle, or say de-risk, average out at the top of the cycle, and then I'm going to try to get back in towards the bottom of the cycle. And that's okay to do. And, I do that somewhat. But how I like to think about it, and how I recommend, people think about it, is, don't go all or nothing, right? It's not a 1 or a 0. So for instance, what I do, right, I kind of have allocations in my portfolio towards shorter term and towards longer term. So in my longer term allocation, which is most of my portfolio, I don't care about the 4-year cycle, really, right? I'm just holding, and for me, it's a 20-year play or longer, right? This is what I want to be invested in. I don't want to have mutual funds. This is what I care about. So, and I expect to hold these assets for a long time. So in that, and that's, maybe close to or more than 70% of my portfolio really is just long-term. I don't care, right? And I leave those assets in platforms like Celsius and earn passive income on them, great passive income, and I'm very happy, right? Now, for the other 30%, I have said, yeah, this is going to be a medium-term allocation or a short-term or even a short-term allocation, which is like more trading, right? Where I do want to try to play the cycle. And then, no one, right? How do you do it, right? I mean, no one rings a bell right at the top or the bottom, right? So you just have to.
Yeah, I wish.
Right. So you just kind of have to create a sort of strategy. That's where, your strategy and your plan come into play. So it's okay to do that. But I kind of suggest to people, I think it's really valuable to just be a long-term investor in the space. And historically, the people that have done the best have just, been long-term investors, or I had that mindset. Maybe they buy more when they think, it's well priced, and then they do even better. Right. But, so, for most people, that's probably the best thing to do. But then if you want to be tactical, my advice is carve out a portion so that you know what you're playing with, and and that'll, I think, help you make better decisions, because it'll take some of the emotion out where, oh man, like I'm going to sell my whole portfolio and then I feel like I don't have anything. And then I have this, FOMO of needing to buy back in. Like, no, you've thought about it. You have this portion, maybe it's 10%, 20%, 30%, where, all right, I'm going to play the cycles with this. So maybe I'll sell half here where I think, we're near a top and it's not too much of my portfolio. I can be okay with that. And that's something you have to think about ahead of time, right? What is the size? What is the amount of your portfolio that is going to make you not susceptible to these really terrible emotions like FOMO, fear, greed, that almost always lead to bad decisions, regrettable decisions.
Switching gears here, you recently wrote an article on blockchain gaming and play to earn. What are your thoughts on, and maybe you can expand on that and around, NFTs in blockchain gaming?
Yeah, that was a fun one. Super interesting topic too. So I mean, I'm a gamer. I've played lots of games through my whole life, and I still play games. And I think this is just so interesting. So in the article, I kind of outlined that we're in the middle of this kind of real paradigm shift, I think, in gaming, where for so long, gaming has been in what I call like the Chuck E. Cheese model, which is, you play the games, you win prizes, whether it's skins or whether it's, rewards points or whatever it might be, right? But those only have value in the game. They only have value in Chuck E. Cheese. You can go buy a bouncy ball. But if you take them outside of that, they're worthless, absolutely worthless. Right. So wouldn't it be great if the prizes you win or the achievements that you get while you're gaming actually have real value, and that you can actually take them maybe to other games or maybe to a marketplace, and you can gain value from that? I think that's a massive win-win really for everyone. And that's what is getting built and unlocked right now in crypto. And the best example of it, which I also talk a little bit about in the article, is a game called Axie Infinity. And Axie had been around for a few years, but recently it's really started to achieve scale and large adoption. And it now has 250,000 daily active users, which is huge. That's really big. And it's doing, tens of millions of dollars in volume a day, right, on its kind of marketplace. And so how this works is literally, people play Axie, and when they win, they earn an ERC20 token, a crypto token. And guess what? That's in their wallet. They can go do whatever they want with that. They can sell it on Uniswap for cash, or they can sell it on Uniswap for Ether, or they can, provide liquidity with it, I believe, right, and earn passive income, or they can use it within that game, right? And who knows, maybe there'll be other games that accommodate it and they can use it in that game, or maybe that game, or maybe a new game will have a different ERC20 token that, guess what, you can just swap in Uniswap and get that token. So you're done playing Axie, well, you swap into the other token and now you go play the other game, and your achievements from all the your hard-earned, rewards from all the time you spent playing Axie, it can translate to something else. I think that's just such a cool idea. And, and it's incredible what's going on right now with that. People in the Philippines, people in Venezuela have actually found that they can make more money playing Axie than what they can get in their local labor market for whatever reason. And so they're literally using this game to put food on the table, right? And that's also a really incredible, powerful idea.
It is so fascinating seeing kind of what has happened in the NFT space, and like you said, gaming. I think that is the example, like exactly what you're explaining. It makes perfect sense. You play one game and then you earn something. Maybe it's even an NFT that you can then use in a different way in a different game. And it's such a cool kind of how this is all connecting. But with that said, I'm curious what your thoughts are around where things are at right now, because it does have a feeling of a bit of a bubble in the NFT space, in the sense of people spending a lot of money on some of these drops and just kind of the simple like supply demand and that kind of thing. Because I think undoubtedly NFTs are here to stay, and they're here to be, a part of the regular, for all the reasons you just explained. But at the same time, some of these valuations, or like amounts that people are spending on these new mints and that kind of thing, it does seem a little bit outrageous. But what are your thoughts kind of there? Like, does it feel like we're in a bit of an NFT bubble?
I'm not sure. I think that, so first off, I'll say, I'm not an art speculator. I have no experience, in the art market. I have bought art, and I did in fact buy an NFT, but I bought it because I liked it, right? And I, got a print of it, and it's hanging above my computer now, and I'm not going to sell it. I just wanted it, right? So I agree. It does seem crazy, and it definitely seems crazy to a lot of people, especially outside people, that people are paying six figures for a JPEG of a rock, but I would point you though to the traditional art market, especially the higher end traditional art market, where there's some pretty crazy stuff that happened there too. All right. Someone paid like $15 million for a dead stuffed shark that was decaying in a tank of water. Right. That, and that just takes up more space and hassle, right, than the JPEG. At least the JPEG, is easy to manage. Right. Is that in a bubble? I don't know. I think there's definitely real value there in terms of sentimental value, and what NFTs give you is real provable ownership. So when people say like, "Oh, you paid so much for a JPEG, I can just go download that," it's like, yeah, you can go download a picture of the Mona Lisa, but actually owning it has value, especially to these collector types that are paying for it, right? So I don't know whether I'm not interested in going in and speculating on NFTs. That's just not I don't think I have an edge there. It's not my area of expertise. I'd rather spend my time doing what I think I do have an edge in. If people want to do that, then great. I don't know what's going to happen with it. I think the market is certainly here to stay. I don't know if the valuations are. But what definitely is not a bubble is NFTs itself and NFT projects. That is just getting started, I think. There are so many interesting use cases for that. Gaming is one great example. I mean, if you think decentralized finance is big, like gaming is massive. Everyone plays games. Okay. Gaming is a multi-billion dollar industry. It's massive. And I think it's only, and it's been growing rapidly, right? That's game, more and more people play games. I'm really excited about NFTs. I am investing in NFT projects, not NFTs themselves, but the picks and shovels, so to speak, that's how I want to play it. So I think there's a lot of interesting stuff to come there.
Yeah, 100%. And so before we get into kind of the last section, the 3 questions that we end every interview with, I want to ask you about one thing, because at the time of recording this, there is a recent infrastructure bill in the States that's been causing some controversy. And from ourselves in Canada, we've kind of been keeping a high level eye on it. But I'm wondering if you can do a little bit of explaining of what that's all about. Yeah, I'll do my best. So, there's a massive infrastructure bill, that Congress and the administration have wanted to do. And I think there's no question that U.S. infrastructure needs some work. What inevitably happens is, so this is a $1 trillion bill with all sorts of stuff. And what inevitably happens in the U.S. political system, as when there's this big must pass legislation, everyone's trying to get different irrelevant stuff into it, because it's probably going to pass and they can get stuff done. So one of those things, what happened is, and I'm not sure of the exact kind of timeline of events, but the Secretary of the Treasury, Janet Yellen, asked, wanted to kind of low key put in some crypto regulation into this bill. And, she doesn't understand crypto, or maybe she does and she doesn't like it. I mean, I'm sure she doesn't really like it, given her background. But that provision that got snuck in originally, that had the backing of a couple senators that, again, I think just didn't know what they were doing, was really bad. Basically, it was very onerous. It basically and what they were trying to do, right, is they were trying to raise revenue, right? They were trying to figure out, we're about to spend another $1.5 trillion before we spend our next $1.5 trillion. So we need to pay for this, and every little bit counts. And so, let's tax crypto. And it basically, so that's what I was trying to do. And it basically created all these reporting requirements for, basically everyone involved in crypto. And that was the problem, is the definition of who had to report this type of user data and transaction data was way, way, way too broad, right? What they really wanted is for centralized exchanges like Coinbase, Kraken, and other types of businesses that actually are brokers, right? They were trying to define brokers, right? That actually are brokers of transactions and of user information. They wanted those people to report, standardized kind of data so that they could, better get taxed. And Coinbase and Kraken and the other centralized exchanges were totally on board with this, right? They're like, yeah, this needs to happen. Makes sense. We are brokers, right? All this stuff. But the problem is, the definition that they put there, because they don't understand, the tech, was included, validators, protocol developers, all sorts of different DeFi actors that they just don't have this data. They're not brokers because they're just writing code that other people use, or they're validating transactions on a network, right, by mining. They're not getting any transaction data. So there would be no way for them to kind of get this data and to be able to report it. So the fact that the law would say that they have to do that is problematic, right? Pretty problematic. So, the industry, being, very vigilant that we are, right, and passionate, right, immediately kind of noticed this. And there's, a lobbying, kind of community up in DC. I used to know some of those guys because I lived there for a while. And, Coin Center is one many people are familiar with. They went to work and they were trying to educate senators and other people in Congress about why this is really bad and just what it needs to be changed, and having a productive discourse with them. And so a few senators, Senators Loomis, Toomey, and Wyden, right, who do kind of know, crypto a little bit, right? And Senator Loomis in particular, I saw her speak in Miami a few months ago. They put in they corrected it, right? And they were like, we just need to exclude the protocol developers. We need to exclude validators. We need to just make this clearer, and so they can't just apply to anyone. And then there was some back and forth. But as
the industry, did its work to actually educate the senators and, tell them like, look, we're not trying to dodge reporting requirements. We just want this to be realistic and not to hamper this important innovation that we're doing. We really got pretty much all the senators on board. Like, I don't think there was anyone at the end of the day that after understanding what actually was going on was like, oh, like we don't want to do this. Like, we just want to kill crypto, whatever. But unfortunately what happened, and I'm not totally familiar with, the Senate procedures, because it's super complicated and dumb, is they were arguing about the bill for a while. Everyone's trying to put in their own amendments, and things kind of got lost in the shuffle. And, they were basically like, we're not going to amend it anymore. We just want to get it passed. So, the revision to the original amendment that was going to correct the mistake that everyone ended up kind of agreeing on needed to happen, just didn't quite get put through, right? Because the only way they were going to be able to, do it at the 11th hour after they had already said they weren't going to amend it anymore was if they had unanimous support. And then apparently what happened is that this one senator from my home state of Alabama, in fact, wanted his own thing in the bill that he didn't get. And so as a matter of retaliation or stubbornness or something, was just like, no, I object to any other amendment. And so because it wasn't, unfortunately, that's all it took, right? Because it wasn't unanimous, that amendment didn't get corrected. It didn't get in there. That just goes to show you how, kind of stupid the system is, right? And I did a tweet like, I don't think it's news, right? I don't think the market thought that the Senate understood crypto, right? So I don't think it's news. And then people were like, oh, sell, like, or there's going to be a dump. I never really thought that was the case. But the good news is that the bill's not law yet. It needs to still go through the House of Representatives. And there are a lot more, I know for a fact, there are a lot more people in the House that understand crypto. We have a lot more kind of allies there. The industry and the lobbying arm that we have still going to do its work. And so I'm optimistic that it will get corrected. I think now, there's consensus that it needs to get done. I don't think, so I'm optimistic there. And then even if for some reason it passed the House in its current form, it would still take about 2 years to actually get implemented, at which time we can, the courts, there are other avenues. So I'm not really worried about it. I think, cooler heads will prevail. But it definitely, I think I think it's kind of a net positive, because it created a lot of, I think it woke up the industry to, this is something we really need to pay attention to. We are going to get regulated. It's going to come, and we need to be highly engaged in productive discourse with lawmakers so that this stuff doesn't happen. So Yellen's strategy, whatever it might have been, to perniciously start taxing crypto or something, I think totally backfired, because all she riled up the industry. She created a lot of attention and buzz about this issue. There was a front page article on the Washington Post about how the infrastructure bill is being held up by crypto, and what kind of power does crypto have, and so it's getting more on the radar. And I think it's a wake up call for the industry, which is really good and important. And I think moving forward, we're going to see a lot more political mobilization in the industry, which is only going to be a positive, hopefully. So.
Super interesting. Shahar, you've done a great job explaining all of these things throughout our conversation. We really appreciate it. But we like to end every episode of Show Me the Crypto with a little 3-question segment that we call You Had Me at Crypto. Alf's going to ask you those questions.
All right.
All right, Shahar, you ready for these 3 questions?
I don't know, but let's do it.
Don't worry, it's not too difficult. So the first question here, who's your favorite person to follow in the crypto space?
Oh, man. Well, now I started following a lot more regulatory people up in DC since this incident. I don't know. I have so many. I don't know that I have a favorite. I like I like following Vitalik. I like following, people building in DeFi. I'm sorry, I don't have it. I need to think about it more because it's like an important question because everyone's really into Twitter.
You can never go wrong with Vitalik.
Yeah, you
though.
throw out Vitalik.
Yeah. Vitalik is a great, mixture of like really good information and also kind of like being a little funny in the way that he is. So
Nice. All right. Second question here. What will the price of Bitcoin be 10 years from now?
10 years from now? I'd say at least $600,000.
That's a very that. I feel like you fell right in the middle. Like that is like the median guess kind of.
I don't want to say like $1 million because that sounds so crazy, but I think so $600,000 is about the price point where we'll hit parity with gold's current market cap. So I think we should at least be there within 10 years.
Cool.
We're going to find you 10 years from now. And
all right. Yep. I know it.
All right. Third question here. What is the most underrated coin or project in crypto?
Well, I don't want to like shill coins that people aren't going to hear. I'll just say, do your own research. I really like a coin called Rook Keeper DAO, which is a really interesting game theoretically sound protocol for MEV distribution in crypto. So that's a mouthful. Again, do your own research. But I would also say Ethereum.
Awesome. Well, like I said, Shahar, this has been an awesome conversation. Thank you so much for joining us on this episode of Show Me the Crypto.
Absolutely. It was a lot of fun, guys. Thanks.
Thank you for listening to Show Me the Crypto. Please make sure to subscribe as well as rate and review this podcast.